What's up, you guys? Today I'm going to be talking about dividends, especially if you're new to trading, what dividends is and a strategy for long-term investors, exactly how it works. I'm going to be going over the whole strategy about that on the computer now. I'm going to show you guys step by step of how it actually works. All I ask, if you just take 5 seconds of your time, hit that like button below. It really helps out this channel, and subscribe if you haven't yet. So dividend investing is actually like the company paying out the investor for owning a share in their company. So let me give you guys an example of what I mean. Coke stock, basically, if you guys know, Warren Buffett owns a ton of shares of Coke. Probably, I think, around maybe 10% or even more, around there. You can see that Coca-Cola pays a dividend of 25 cents per quarter for owning the stock. So how this works exactly is, let's say if you buy Coca-Cola, any price range here, $170. Every quarter, and there's 4 quarters in every year, they'll pay you 25 cents for owning that stock. And you can see here that it's been continuously for every year. So every 1 share you own, you get 25 cents per stock, and sometimes they increase that over time. I personally don't invest solely in dividend stocks. Just because a stock pays out dividends doesn't mean it's a good investment, in my opinion. The reason I'm saying this is because sometimes companies do cut back on dividends, especially if we're having this huge pandemic going on. A lot of companies have been cutting down on dividends. Johnson & Johnson is another good example of how the company's been uptrending for the most part and paying out a little bit of dividends. Dividend investing is more usually for a conservative investor that wants a small return, quarterly income for owning and investing in the company. Ford is actually a company that's been downtrending for the most part, but sometimes people invest in this company because it pays out dividends. Like I said, I solely don't invest in companies that focus just paying out on dividends. I like to invest in companies more about that have innovation, and companies I see are going to be doing very good in the future and dominating the market in their niche. As far as, 2014, it's been downtrending in the market. So let's say you would have bought Ford around, let's say, the $17 range here. As of today, Ford is actually around $5, which is pretty low. You would like to invest in dividends while the stock keeps growing. That way, it's just an extra amount of income you earn. But if you solely invest in dividends, you could still see you probably would be around, lost 50% of your initial investment just off investing off dividends. Carnival is paying out a dividends of 50 cents per share, but they most likely are going to be cutting back on dividends due to, downtrending for the most part and basically not being able to currently make any income. How to calculate dividends? I wouldn't use Robinhood. I would use more of either, if you don't have Thinkorswim, you could always go to Yahoo Finance. Is a good easy one to use. So we want to go here, Yahoo Finance. You can actually click here and you can put the stock company that you want to see. It's Microsoft. Let me show you guys here. And you can see here that they've been paying dividends every year while the stock has been growing. So if you would have bought 5 years ago, you could have bought it at around $45, $46. And you can see it bounced all the way close to 185, downtrending with this pandemic going on. Now it's starting to uptrend in the market, especially since everybody's at home. The company grows over time, long term, and they pay out dividends, which is pretty good. Especially, it's just an extra amount of income that you can take home every. So it's not much of this. They pay about 46 cents per share that you own, but it adds up over time, and you can use that actually to invest in more stocks and grow your portfolio with time. I prefer to usually invest in stocks that are more innovative and not dependent on paying out dividends. Microsoft's one, Apple is another one that I can see that I can own for many years from now. We go to the 5-year chart, you can see how it's been growing within these 5 years. You could have bought it as low as around the $100 range here. In 5 years, hit 300 times through your money. Honestly, Amazon and Tesla are the most innovative companies out of all of them. I wanted to buy Amazon around this $600 range, but I didn't have the initial investment to long-term invest in it. I did long a couple positions here at the 1,700 range because I know that Amazon's continuously growing every year. I actually sell on Amazon. That's how I make actually my main amount of income, and they're just killing it. I mean, they're expanding to every country. They're buying out any competitors that are in those countries to be able to expand in those countries. They have a lot of buying power. They have a lot of leverage. This is a good long-term investment. This type of company does not pay out a dividends, but they continuously are growing. This stock was around $400. Now it's at $2,400. That's a big increase within these initial investment, multiplied times 5 just by holding this investment for 5 years. I think Tesla is another great one that they're just killing it right now. I really don't like this movement here because it just shows that people, kind of day trade this type of stock. But I do think this stock is the future. It's going to be a good long-term investment, and it's a very bullish investment if you want to invest long-term. But these type of stocks don't pay out dividends. You can actually see the dividend yield percentage usually here, and that's usually how much percentage you'll make from owning this stock per year. That's usually the average. So just to calculate this really quick for you guys, let's put 174 times 26 times 0.0117. Microsoft basically pays out $2 for every share that you own. So it's not a lot of money, but there are other stocks that pay out maybe 4-5% dividend yield, and depending on your investment and your investment strategy, it might be good. AT&T stock actually pays out pretty good dividends. It actually pays 6.63% in dividends, which is most likely going to be getting that money unless the company is doing very bad. They might cut back on the dividends payments, but AT&T is a really good company to hold long term. 3044 times 0.0683. This company actually pays you $2 every year for holding one share of AT&T. So let's say if you have 5 shares of AT&T, you'll be getting $10 every year. It's pretty good investment. It's something that you could actually use to build your portfolio and keep reinvesting within the years, and then you'll see your portfolio grow within time. So hopefully this video helps you out if you wanted to start investing in dividend stocks. If you have any questions, feel free to leave them in the comments down below and I'll make sure to answer them. Hopefully you like this video. Make sure to hit that like button if you do, and subscribe if you haven't yet, and I'll see you guys on the next video.